Hey guys, and welcome back to the Finance channel. My name is Daniel, and today we will be doing a 2020 recap. Around 2 months ago, I went ahead and created this YouTube channel called the Finance channel. And since then, I have created a number of stock analysis videos where I go through a company, their business model, revenue growth, financials, and then come up with a valuation, whether or not I think it's overvalued, undervalued, etc. In this video, I'm going to go through my stock recommendations that I've given out over the past few months and updating you guys on them, where the stock is trading at now and my thoughts on them currently. If you are new here, first of all, welcome to the community. Make sure to hit that subscribe button to see more videos just like this one, and also hit that like button as it really helps the channel out. It helps more people see these videos. So stock number one was Dropbox. This is the first video I ever made, an analysis on Dropbox, and since the recommendation, the stock is now trading 30% higher. I recommended that this stock is undervalued anytime it is trading under $20 per share. After the time that video was released, it traded under $20 for over a month and has seen a giant run up throughout December and is now trading at around $25 per share, an absolutely incredible move up. At this point, I neither think the stock is a buy or a sell. If you have shares, I think it's just a good hold. I mean, it's a very safe company that, in my opinion, is still undervalued, but I think that time a month ago was the time to buy, and I think there might be some better opportunities out there at this point in time. So stock number two was Slack, ticker symbol WORK. I really like this one as like a technology growth company to hold in your portfolio. And, I thought this stock was a buy anytime it was in the 25s. Well, after I released my video, the stock dipped to the 25s. And since then, it's traded, it's trading 70% higher after the news that Salesforce would be acquiring them. So, in my opinion, Salesforce made a great decision buying Slack, being able to integrate Slack into their business. They have, millions of customers that they're going to be able to market Slack to. So a great decision on Salesforce's behalf. And, we've seen a giant run up because of that. So, Slack isn't a company we can really hold anymore. Although it is getting acquired soon, it's still trading, but it's just going to stay flat up until the acquisition takes place. So you really have two decisions at this point: either sell your shares, take the profits, or you hold the shares and you get like partial cash and partial Salesforce shares. So it really depends on whether or not you like Salesforce. If you like Salesforce as a company, it might honestly be worth it just to hold Slack straight through the acquisition, and then you just end up with some Salesforce shares and some profits as well. So that's kind of my thoughts on Slack. I'm kind of sad that I can't hold it anymore, but still a great company, but we got to move on to other things now. So stock number three was Revolve. Revolve is a online e-commerce fashion retailer type thing, and they are targeting mainly millennials with their products. At the time of the video, the stock was trading at around $18 per share. I went ahead and said that the stock was undervalued anytime it was under $20. Well, since that video was released, it's now trading over 66% higher at over $30 per share. In my opinion, Revolve is not a buy at this point. I'm going to reaffirm my target that, under 20 is where it's overvalued. I think it's trading around fair valuation right now. It might be a little kind of on the, lower side of fair value, but, it's a great company growing revenues by a massive, amount, and will continue to grow going forwards. Great company, just not really interested in buying it anymore just because of how much it's run up over the past little while here. So my next video was about Facebook stock. Facebook is a giant tech company that plays the social media space, and I went through Facebook's business model and I really like the company. But I went ahead and said that at 200, I think it was $280 per share, 290. It was a little on the overvalued side. Although I did say, if I'm going to buy something in big tech, I'm going to buy Facebook, just because of how low their valuation is compared to Google, Amazon, Apple, etc. So although I like Facebook, I said it might be worth it to wait a little bit. And since then, we've seen a bit of a downwards move in Facebook, going down from around 295 to around 200, under 270 is what it's trading at right now. So definitely an opportunity. If any of you guys like Facebook or want to get into Facebook, it's definitely an opportunity to get in here. I really like it as a company, and I think that it is the best US big tech company to hold, just because of their long-term potential and where I think there might be 5 to 10 years from now. I just want to address one thing about Facebook. There has been talks about Facebook getting split up, so essentially splitting up Instagram, WhatsApp, and the Facebook platform. There's a lot of negativity about this, but honestly, this might release a lot of shareholder value and might actually end up being a positive. Just think about this. Facebook is probably the platform that is growing the least out of all of Facebook's different platforms, just because of how big it is, right? Imagine Facebook gets kind of taken into its own entity. It's probably going to be trading around the same valuation as it is currently. But if they spin off Instagram, WhatsApp, and Oculus, which have a lot more growth in front of them, those valuations may actually increase into higher price to earnings ratios just because of that higher growth that those platforms have in comparison to Facebook right now. So a lot of shareholder value might be released because you might be able to invest into Instagram solely, or just into Facebook, or just into WhatsApp, or maybe even Oculus, the biggest player in the virtual reality space, which would be very, very interesting. So my next stock pick was Lemonade. Lemonade is an insurance company revolutionizing the insurance industry. I really liked Lemonade and said it was essentially the best way to play the insurance market. At the time of recording, the stock was trading at around $60, or a little over $60 per share. I said the stock shows a bit of value anytime it hits the 50s. Well, shortly after that video was released, it hit around $52 to $53 per share. And since then, it's been on a massive run. Currently, even after a minus 7% day, it's trading at $125 per share, over 123% higher than when I recorded, or when I released that video. So although I'm not buying Lemonade right now, if it ever got back to those levels, I'd probably just continue buying. But it really isn't that interesting at this moment at a $6 billion valuation. I think, if I had, let's say it might be some time to maybe take some off the table, or honestly something I'd like to do sometimes is to play with house money. If let's say I double a position, it might be worth it to sell half, take my original investment out, and then just play with house money. Whatever happens, if it keeps going up, I keep making money. If it goes back down, I can just put that money back in at a lower price, and that's one way to play it. But Lemonade, I'm not buying it. I really like it. It was mainly two catalysts that brought the stock up. Or rather three. One was just the realization of Lemonade's potential long term and how they may really be one of the biggest insurance companies in the world a decade from now. Another one was the expansion into France, their market. And honestly, this was expected. This was part of my bullish thesis, global expansion. It's starting. They're now in the UK, US, France, and I'd expect more markets to come as the years go by. And also the announcement into the healthcare space. They're going to be offering healthcare insurance, which, again, this was part of my bullish thesis. I expected this, and, I expect them to expand into pretty much all the different insurance markets as time goes on. But again, I think it was just the realization that, Lemonade might very well be one of the biggest insurance companies in the world, 5-10 years from now. And it's, very interesting and intriguing a lot of investors. But then again, at this price, I'm not buying. I think it's a hold, maybe take some money off the table, something like that. So my next analysis was the RealReal. I really liked the RealReal, and I recommended buying this one anytime it was kind of in the 12s or the 13s. I thought it was good value. I actually said this during the video. I thought it was good value, and since then, the stock has been on a massive run, trading over 50% higher since then, now at a $1.8 billion valuation. And in my opinion, I think this is kind of like a Revolve. Pretty similar to Revolve, actually, where, I think it's kind of trading near that fair value. I'd probably continue buying this one if it ever got back down to the $13, $14 range. At this point, anytime it's under the $15 range, I'd probably continue buying, but, it's been on a massive run, and, I just can't bring myself to buy more at these prices just because of, how low it was a little while back, and I think that was a better opportunity to get back in. So my next stock, we've got two here that are more recent. So these are stocks that I recommended within the past month. So one is actually Beyond Meat. Beyond Meat plays in the plant-based meat sector. They create essentially fake meat where they take plants and turn that into meat that tastes pretty much like meat. It's pretty amazing. If you haven't tried their products, I recommend going to your nearest Costco or Whole Foods, etc., and buy their product just to try it out. It really is incredible what they're doing. And in this video, I thought that I gave some long-term guidance for the company, and I thought that this may very well be a 10x over the next decade, if not a 10-15x, depending on how they execute, depending on how the plant-based meat market grows over the next decade. And I mean, I really like the company. So, since then, the stock has traded pretty much flat, which, again, I personally said that I wouldn't be buying this one unless it hit the 120s, because I already have 2 plays actually in the plant-based meat sector. I'm going to be announcing those in a few days. But again, if Beyond Meat got into the 120s, I might consider buying it. But again, I think it shows some good value here. If you're a really long-term investor that has a long-term mindset and is willing to hold the stock for the next, 3, 5, 7, 10 years, this might be a very intriguing opportunity, especially with the fact that the market has gone up so much over the past few months. And Beyond Meat has actually stayed stagnant. It's pretty incredible, and I think it presents a pretty good buying opportunity. So my next stock was TDOC, ticker symbol TDOC. I really like TDOC. I think it's the best way to play the telehealth space. They recently merged with Livongo and have created a absolute beast in the telehealth market. They are easily the #1 player. No one's even close to them. This is kind of like a situation with Tesla and everyone else. Tesla is so far ahead, the same way that TDOC is so far ahead of everyone else. I think they're going to be able to take full advantage of in this move to the online health or telehealth, and I really like the stock. And since that video was recorded, it's trading around 5% above those prices. I said it was fairly valued at around $200, and I liked it a little more at 180, which it did dip to 180 on around the 16th of December. So this is really one of those stocks that I'm looking into buying more of in 2021. As vaccines roll out and things kind of go back to normal, I think this one may see a bit of a downtrend just because it's been bundled up with a lot of the stay-at-home stocks. But that being said, it's a great company. Again, under $200, I like it. Under 180, I really like it. Under 160, I love it. So we'll see where it goes in terms of price action. I really like the company. I think there's minimal risk going forwards at those prices that I mentioned. So again, guys, I want to thank you guys so much for watching. This year has just been amazing. I've just been around for 2 months on YouTube here now, and we've already grown this community to over 90 people, and it's continuing to grow. I really hope that over the next year, I'm able to continue to pick great stocks, and stay tuned for stocks, or 10 stocks to buy 2021 edition. That should be coming out over the next few days. I'll go through a lot of new stocks that I've kind of found. It's kind of hard to find some deals out there, but I think I've managed to find a few. And some I'm just looking into 2021, just because of how frothy the market is right now. We may see some better opportunities in 2021, fingers crossed. But then again, thanks so much for watching. Make sure to hit that like button. It really helps the channel out. Subscribe if you're new. Thanks for watching.